Good evening. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday night, September 26th, 2006. And I've got the S&P 500 up on the screen here again, looking at a daily time frame. I just wanted to make clear where I think the S&P 500 is right now. And if you look at this low at 122.34, that's the number right there, and go straight up to the neckline right up here, you're at about 129 is the level right up there. So the height of this pattern is $7.70. Now, if we take this head and shoulders pattern and come up with a measured move based on the height of that pattern added to the breakout point occurred right here at about 127. So 127 plus $7.70 gives us a target, actually, and I've been misstating this a little bit, of 134.70. So our target really should be at about 134.70, and I think that's where this market probably has the potential to continue to go to with this continued upside bullishness. Now, I've been cautious the last few days because I thought maybe the mid-cap stocks were in jeopardy of breaking down. Let's take a look at those just while we're at it. They haven't broken down, but they still do have a little bit of resistance they need to get above. It's nice to see that they've recovered, but it'd be giving me a lot more confidence if it were to get back above there. So that's where I thought maybe we were in danger of a bigger breakdown when you look at in particular, the weekly time frame on the MDY. And I just typed that back in wrong. But in here, I still think this looks dangerous, and I don't want to be a worrywart. I just want to be aware of all possible scenarios out there. This doesn't make me bearish on the market because I'm going to trade what I see based on the shorter term time frames, but I want to keep that in the background. Now, the market, I said on the MDY, is that we needed to see it get and hold above 136.50 to give me more confidence, and we got that. Now we've still got some resistance levels up here near 138.5 or so, and I think clearing that would pave the way for this continued upside in the SPY. So why do I mention this? Only because we're nearing these objectives that we laid out months ago. So if you're bought as an investor, what it means is, hey, don't go out and sell just because it's reaching a price target. Instead, be aware that it's reaching an area where there's the potential to find sellers. Now, it doesn't, very similar to the NASDAQ. The NASDAQ 100, I've been talking about this 200-day moving average along with the prior support becoming resistance and the two-thirds retracement, but the market keeps going higher. And that's why I always say that when you look at what people call resistance. They might have called 40 resistance. It's only potential resistance. It's only resistance after the fact. Once the market has turned lower from that level after probing numerous times at it and then turns lower, then in hindsight we can say, hey, 40 was resistance. But right now it's an area where we had the potential to find resistance, but the market didn't do it. The market wanted to keep going higher. And we can't get locked into a belief that a certain area is resistance. And that's why I've been stressing it. You don't want to run out and sell short. Instead, continue to focus on the shorter term time frames and manage risk on those time frames and let the market decide what you ought to be doing and where you ought to be getting in and out of different stocks. Now, for most people, you're probably going to see on the news tonight, hey, S&P 500, all-time highs, that sort of thing. Most people, confidence moves in direct proportion to the price of the stock. That is, as the stock goes higher, they get more confident. Now, I've learned that in order to really succeed, you have to be more paranoid. The more it goes up, you have to be paranoid. I'm always, looking over my shoulder saying, where are they? Who's coming to take my profits away from me? That's why I always stress that it's defense that wins the game. I've been stressing that throughout this whole, since I started this blog back in March. As the market declined, I've been leading trades that have been low risk and with the primary trend. So it doesn't matter what the overall environment is. I still am of the belief and always will be that it's a stock picker's environment any day of the week, any day of the month, any day of the year. There's always a good stock. And when the market's going higher, you're always going to have the stocks that are getting beat up real bad, like Microsemi, MSCC the last couple of days. And you cannot be focused on just getting long. Here we had the stock Merix, MERX, blow up today. So there are risks in the market. You can't just blindly buy stocks because the trend is higher. That's why you have to say it's a stock picker's environment. I'm going to trade what I see, forget about what I believe, and be completely objective. So let's take a look at the disclaimer, and you guys can agree quietly as you sit there and read this that Brian Shannon is not responsible for the decisions that you guys make, and when you press the button to buy, you're responsible for those decisions. You'll also notice that I've got a new video host, this Rever.com. These guys, I like the fact that it's crystal clear. These videos are just, it's amazing how much better they are than the other two, YouTube and Google, that I have been using. So I think I'm going to stick with these guys unless there's any problems. And the thing is too, they embed a commercial at the end of it, so I can get paid if you click on those. They told me in the agreement that I'm not supposed to encourage people, but if you find it interesting, go ahead and click on it, and it might put a couple cents in my pocket, so I would appreciate that. Anyways, let's get down to the stocks right now. First of all, let's take a look at BioReference Labs, symbol BRLI, Boy, Roger, Larry, Indian. Looking at a weekly time frame, obviously the stock's in a great uptrend. Here on that daily time frame, we've had a nice low volume pullback. We had some nice volume come back into this stock today as it found support along that 20-day moving average. So let's see what happened in here. And this is a pretty wild stock, so you might want to trade smaller share size than normal. But you can see it probed that 5-day moving average, came up through it, and kind of had some back and forth action in here. What I'd like to see happen in this stock is a pullback to $23.35, and then I want to buy the stock above $23.50. Once I'm in it, what I'm going to do is put my stop at about $23.15. So that's about a 35-cent risk. But what I'm looking for in return is a move up towards about $25 a share to test these highs right here. Obviously, an uptrend, the definition of uptrend is higher highs and higher lows. I'm just looking for it to tie this area. If we can buy the stock at $23.50 and it runs up to make $1.50, then you've got a nice, obviously $1.50 reward for the perceived risk here on my part, based on where the stop, where I'm suggesting a stop at $23.15 of just 35 cents. So next up we have KYPH. This is Kyphon, I guess, is how I'm going to pronounce it. And you can see in here that this stock has pulled back a little bit, similar to the last stock where it's been testing this 5-day moving average, and that 5-day moving average is flattened out. Let's back up first to the daily time frame, so you can see again a nice volume pattern of increasing volume on the way up, low volume pullback, relative to the advance. And here on the shorter term time frames, it looks like it's finding some support in here. So what I want to do is buy this stock on strength. I want to buy it basically above that 5-day moving average. I want to look at it above $37.70. Above $37.70 is where I'm going to buy this stock. I'll put a stop at $37.32. So my perceived risk here is about 38 cents, or I'm sorry, 38 cents. And I'm looking for the stock to get back up, similar to the other stock, to the recent highs, 39, 39 and a half. So again, that's about $1.30 of upside and about 38 cents of downside risk based on where I'm going to be putting the stock in KYPH. NASDAQ NDAQ, we looked at this one a couple days ago, didn't get involved in it, and it seems like the stock has settled down in here. It's broken this little pattern of lower highs, and it's got these higher lows. So I think the buyers are back in control of NASDAQ. What I want to do is I want to buy it. I was watching the stock a little bit today. I think you can buy it right here at $31.20. At $31.20, I'm going to buy it as it pulls back, but I'm going to put my stop just below $31 a share. I'm going to put my stop at $30.98. So my perceived risk here is about 22 cents, and I'm still looking for an upward move to about $33 a share. And if you recall from 2 days ago, that was based on the measured move, giving us an area up near 33 to 33.5 for NDAQ. Last long we're going to look at is this UTSI. This is UTStarcom Incorporated. the stock, this weekly chart really appeals to me, and if I was an investor, I'd probably be invested in this stock. I'm not an investor, I'm a trader, so I'm looking for a breakout, and I think the stock can run up to about $10 a share short term here once it gets moving. It's gotten a little bit of stabilization in here today after looking a little weak yesterday. Now it's back again to that 5-day moving average. There's nothing magic about a 5-day moving average. If you're wondering, is that the main thing I look at? No, it's not. It's just one of a lot of different pieces of a complicated puzzle to consider overall when objectively putting together a risk-reward scenario. So when we look at a 2-minute time frame, what I'd like to see is the stock get above this afternoon's highs. The highs here were 894, so I'm going to say buy it above 895. Above 895 is where I'm going to get involved, and if it gets below 880, I'm going to kick it to the curb and forget about it. But if it can get above that 895, I'm going to get involved, and basically I'm going to risk about 17 cents, and I think the stock can make a run for $10 a share. So would you risk 17 cents to make $1.05? If you agree with that risk-reward analysis based on objective look at support and resistance, I think you'd be nuts not to think it's a good risk-reward. Aspen Technology, AZPN. If you've been listening to me the last couple of weeks, we've tried this one 3 or 4 times three times I think last week, and got stopped out of it once this week. So I don't know if I'm being stubborn on this or if I'm just being persistent. I suppose if it finally does what I hope it will, which is to completely cave in, fall apart, and see some panic in there, that I was persistent. But if we get stopped out, then I was being stubborn. So let's again, we'll let the market be the judge of that. But I still think the sellers keep coming into this thing, hammering away at it. I think it's just inevitable for it to drop back down to this $10 a share level. That's all we're looking for. It did have this sell-off in here today. So what I'm going to do is I'm going to look for a rally up to $11.35. And once it gets up to that, I'm going to set an alert, sell the stock short below $11.20. My stop will then go at $11.40. So risk of about 20 cents, and I think $1.20 of potential opportunity if it can drop down to $10 a share. So a 1 to 6 risk reward ratio. And again, I say as if you agree with my risk reward. And the fact of the matter is that a risk reward is garbage in, garbage out. It's only as good as the information that you feed that risk reward. Hopefully, my analysis is correct, and we only need to risk 20 cents. But if we get stopped out with 20 cents, then what was the risk reward ratio other than just some figment of my imagination? Cameco, CCJ. We hit this one the other day, and I think that this rally in here is inevitably going to fail. What I'd like to see the stock do is rally up a little further, maybe up towards this 5-day moving average, meet it at about $37.50 or so. Once it gets up to that level, I then want to sell the stock short below $37.20. So taking out today's highs basically is what I'm looking at. So once it gets up to $37.50, it takes out today's high. I want to sell it short, put my stop up at about $37.70, so about a 20-cent risk, and I think you're going to see it hit this $35 level again. So again, it's all about risk reward. Again, I'm not telling you to look at this commercial at the end here, but if you want to support this website, might not be a bad idea. My name again is Brian Shannon. Thanks for your time.